All right, so welcome once again for the weekly webinar of Week Ahead with Religare Technicals. In this webinar, in case if you're joining for the first time, I'll just share the overall format. So first, we give a brief overview about the action of the passing week in the key indices, sectors, Nifty 50, top 5 gainers, losers, followed by our view on the key indices, both Nifty and the banking index, and some of these stocks which are looking promising for the next week, followed by a quick poll, and then we can end with the Q&A. So I guess we have a couple of queries. So good evening, and all right, so we have not started with the Q&A yet, so we have to wait, let this webinar end, and post the poll we can start with the Q&A. So let's start. And a quick disclaimer that the view which we share, which we discuss here, are not a trading or an investment recommendation. So before making any trading or investment decision, please check with your financial advisor once. All right, so fourth successive week of rise, when it comes to both Nifty and Sensex, and the consolidation that we were discussing earlier, 19,300, 19,550, we have ended that consolidation, inched higher. When it comes to Nifty, we have almost tested the new milestone, just 20 points away from the new milestone of 20,000 mark. But yes, on Friday's session, we saw some profit taking too, but still we could manage to gain nearly 1% each when it comes to both Nifty and Sensex. Talking about sectors, majority of sectors, were participating till Friday. Things were great for across sectors, wherein banking was the highlight. During the week, it was among the top performer, followed by media, pharma, energy, and financial services. And a sharp cut in the IT pack on Friday, result in 3% decline in the IT index on week basis, followed by marginal profit taking in middle and reality space as well. Talking about gainers and losers, top 5 gainers and losers from the Nifty 50 basket, you will find 3 names from the banking space on the gaining side. So Kotak Bank, SBI, and ICICI among the top gainers. So roughly around 4 to 5.5% is something that all 3 counters managed to gain. At the same time, L&T and ITC also did well. Both stocks are trading at the record highs. Still no sign of stopping or exhaustion, so still look firm. Talking about the losers in the Nifty 50 basket, 4 names from the IT pack: Infosys, TCS, LTIM, and HCL Tech. So as you can see that on the sectoral front also 3.5% kind of a cut, so it's reflecting in the stock movement as well. And apart from all these names, SDFC Life also shared nearly 3%. So this was the overall, tone for the key indices, sectors, and the top 5 gainers and losers from the Nifty 50 basket. Now let's understand that what lies ahead for us, especially when it comes to Nifty and the banking index. So first, we'll talk about Nifty. So this move, when we were here, we crossed this mark of 18,800, 18,900. Since then, we are seeing this, this steady up move, a very steady up move, roughly around 70 to 80%, kind of angle that we are seeing a surge in the index. It's a very steady up move that we are seeing, a marginal consolidation during this phase, this 19,300 to 19,550, and then resumption of the trend. It's a very sharp move, I would say, that we have seen after a long period, and this almost 1,500 points that Nifty has gained very less duration. So Friday's decline was somewhere anticipated. Why? Because the kind of move that we have seen, plus a psychological hurdle that we have at 20K. for the Nifty index. So both were somehow indicating that yes, there should be some consolidation or profit taking in the market. So next week also, we believe that Nifty should spend some time around the current level before making any further up move. And as you were seeing, this is something which is important to understand, that earlier we were also rising, but we have had phases of price-wise decline also, or Nifty spend in a consolidation for a longer period. But this time around, it was almost vertical. So we need some time, some consolidation, either price-wise or time-wise in the index before making a meaningful move above 20K mark. So are we saying that the trend has reversed? So that is not the case yet, because we feel that this zone earlier, which was the consolidation area, should act as a support. So 19,500, 550, first support major around 19,300. For the week, we expect these levels to hold, plus we have this trend line support, which might also come around 19,400. So broadly, this range 19,300 to 550 is going to be the support zone for the Nifty in next week, in case if the profit taking extend. Upside, we feel that this psychological mark 20,000 and 20,200 in the next level is going to be the major hurdle. So we expect index to consolidate in this band with possibility of profit taking after this recent surge. But not all the sectors and stocks are going to be under pressure or witness correction at the same time. We are still seeing certain sectors holding strong or witnessing traction. So in fact, if I'll exclude IT after this decline, because we were eyeing a reversal in IT index above 31,600 mark for the Nifty IT index. So we were anywhere hovering around 31,300 for almost like 3-4 days. But post this decline, again we are on the back foot. So except IT, all the other sectors are still okay. So yes, some of the sectors are also looking stretched in line with what we are seeing in Nifty. Be it FMCG, auto, they are also trading at the record highs. And somehow we have seen a very sharp move in some of these specs. While energy and, metals, we still have room. Pharma, we still have room. Reality also selectively we can see. So it's not that during the consolidation, we are not going to find the opportunities on the long side. So the focus should be more on the sectors which are showing resilience. So today, we had banking and financials, which are holding strong. So one should plan their strategy accordingly, that sectors which are doing well, stocks which are holding strong, and wherein we have risk to reward favorable, despite the consolidation tone, that is something that one should focus on. So now, after Nifty, what we are eyeing in the banking index. So if you remember that we were discussing about 44,500 being the key make or break hurdle for the banking index, and we have in a just single day, like this candle, in this single day we have engulfed all the negative candles that we had in last 7-8 days we had made. So that clearly shows that banking is still not in a mood to slow down. We are still seeing positive tone to continue. In fact, it looks comparatively better if I'll compare it with the Nifty index. So, the thing that we were discussing, that we might not see, broader negativity when the market corrects, Nifty consolidates. Banking, financials, they're likely to do well, in fact, in the coming week as well. So ICICI Bank, Axis, Kotak, SDFC also looks okay. IDFC First Bank, Federal Bank, these are some of the names wherein we are still seeing very strong, positioning. So keeping that in mind, we feel that banking looks comparatively better. But yes, there's a possibility that we might see some profit taking in line with the Nifty. So 45,500, this zone is going to be the first support, and then 45,100 closer to the 20 EMA is going to be the next support area. Upside around 46,900 to 47,500 is going to be the area where we might face hurdle when it comes to the banking index. So banking comparatively looks stronger. We've talked about few names which are, either trading at the record highs or on the verge of making a new high or fresh breakout. So look for candidates wherein we are seeing sustainability of the move, especially from the private banking space. From the PSUs, SBI, Bank of Baroda, Canara Bank, these are some of the consistent name which we usually name. So one can look at, accordingly when it comes to the PSU pack. So banking looks comparatively okay. Now, when it comes to stocks, where one can look at, amid this consolidation and profit-taking tone. So Galen is the first name wherein we are confident about, like, in case if markets correct further, there could be some pressure. The damage is going to be less. Why? Because anyways, it's a low beta counter, plus the kind of base formation that we had in Gale around 105, 104 levels in last, almost a month or two. That gives us the confidence that downside scheme seems capped. So the risk to reward, in case if somebody is looking for a long position. In fact, we've discussed about this talk a couple of weeks ago also in this webinar. So we still have the same view that this kind of a consolidation, it's worth taking risk because the risk to reward is favorable. So this broader range consolidations kind of this pivot is offering a buying opportunity with very small stop loss for the upside potential of the entire consolidation range. So keeping that in mind, Gale is the first stock that should be on your radar next week for the long trades. Next on the list from the cement space, Grasim. So Grasim means cement as a sector, we are still seeing mixed trends. So Ultratech, Ramco, of late we are seeing the stocks which were doing pretty well in the cement space are witnessing profit taking. ACC, Ambuja, they were anyways not participating. Grasim, we have seen a fresh breakout almost after nearly 2 years of consolidation. So we feel that this move is not likely to fizzle out anytime soon. So this is one candidate where one can look for fresh buying or accumulation when it comes to the fresh long trades next week. Next on the list from the defensive pack. So today it was HUL was under tremendous pressure, roughly around 4% kind of a cut, but it's not reflecting in the entire basket. So Marico post this breakout, from the trend line breakout, is spending almost like for nearly 2 weeks in a very narrow range while holding up the short-term averages on the weekly chart. So it's an opportunity to accumulate this stock in line with what we are seeing. Again, for the same reason, because the risk to reward is favorable, we have support at 520. In case if the stock is going to break that level, we are out. But upside, we have, to retest the record highs, which is around 600 mark. So in a market like this, wherein we have already seen very strong surge, the idea is to identify sectors in stock wherein we have potential to do well, despite all this consolidation and volatility. And last on the list, we have emphasis from the IT pack. So yes, IT pack, this decline which you have seen in the IT pack has derailed the recovery that we were eyeing in the IT index above 31,600. But this stock in the last 2 weeks, if you see it closely, the kind of move, the kind of positivity that we are seeing in this stock, alongside with exponential rise in the volume, that indicates that this recovery or reversal that we are seeing in this stock is likely to stay. So yes, in line with the other IT pack, other IT mid-cap IT names, it may also witness some consolidation or profit taking after this sharp surge from 1900 to 2300 plus zone. But once we see some stability in the IT pack and some reversal or rebound, it is likely to outperform the entire pack based on the kind of traction that we are seeing from the last 2 weeks. So it's a stock where one can accumulate, not to go aggressive longs, but one can accumulate based on the recent price behavior and plus the expectation that it should post this reversal, should gradually inch toward the previous swing highs, maybe closer to around 2700, 2800 levels in next weeks to come. So net, when it comes to Nifty consolidation, some profit taking is expected. 19,500, 19,300 zone is going to be the support area. 20,000 plus zone means 20,000, 20,200 zone is something that we are eyeing as a very strong resistance to cross. So focus should be on the sectors wherein we are seeing resilience. So banking is one such sector wherein we are seeing resilience alongside financials, and the other sectors also we have discussed about, like selectively one can look at in the other sectors barring IT. And in IT also we have discussed about emphasis, which looks comparatively stronger. So other than emphasis, we have talked about Marico, Grasim and Gale, wherein we are seeing strength and they are less volatile. So in case if something goes wrong, means the profit taking extend further, we see volatility during the consolidation. These stocks are likely to outperform the others. So this is all from the presentation part. Now we'll have this quick poll and then we'll start with the Q&A session. So please quickly fill this feedback and then you can start posting your question using that Q&A tab. Please fill this feedback and then you can start posting your question using that Q&A box in front of the screen. All right, so let's start with the Q&A session now. So first question on chemical sector from Mr. Emma. So see, last week also we have discussed about this, that this sector, we are not seeing any sign of reversal or participation yet. Selectively, yes, some of these stocks participate in the move every now and then, but as a sector, we are not seeing a very strong participation. So for a time being, I feel that it's prudent that in case if the view is short term and you are eyeing some momentum, one should stick with these sectors which are participating in line with the index or rather outperforming the index. So chemical is not at present among those. Okay, next question from Mr. AR on chemicals that we've already discussed. AMC stocks, yes. So AMC, in fact, AMC have outperformed, majority of the sectors in the recent 1.5 months. It's almost like a vertical move, be it SDFC, AMC, UTI, Nippon AMC. But now after this such a very strong rebound or reversal, we expect some breather, some consolidation. So for short term, I feel that it's not a sector which I feel comfortable to look for fresh trade, because the risk to reward is not favorable, and I expect some consolidation, some base formation for a better risk to reward ratio. But yes, in case if you are holding existing position, you should utilize approach called like trading stop losses. So let's say if the stock is trading at 800, so your stop should be at the immediate low, which could be around like 780, 750. based on your risk appetite. So don't let your profit turn into losses just because in the market like this, wherein we are expecting some profit taking consolidation. There's a possibility that the stock which have moved up very sharply may witness correction also accordingly. So keep on trading your stop losses when it comes to the MC stocks. Cement, selectively, yes, one can look at, and we've talked about Grasim. So if it suits you, one can look for fresh position in Grasim as well. Okay, so next question from Mr. Avik Ganguly on are the PSU engineering and power consumption power companies set to do well in the long run? So yeah, that is something that we are seeing after very long underperformance in this sector. But when it comes to fresh buying, even for the long term, I would say it looks slightly stretched because majority of these names, they have done pretty well. Mostly are up in the range of 100 to 200% from these previous lows. So after such a very strong up moves, I would rather wait for some correction in case if some company offers valuation comfort, then one can look at. But I feel that in these names, one should be selective. So NTPC is one such name from these, sector wherein we still see comfort. And other than that, Power Grid, Petronet, Engineers India, wherein we are seeing, gradual recovery. And then from the defense space, BEL, BHEL. So these are some of the names where still feel that we have room. But since we are expecting profit taking in the market and they've already done pretty well, so accumulate them gradually, not at one go. So one should, spend some time and look for comparatively where they, because the earning is also ongoing right now. So one should look at from that perspective also, if you are accumulating for the long run, that wherein we are seeing the fundamental are also aligned. Okay, so next from Rakesh Kumar Sharma on IT sector, auto sector and pharma sector. So IT, anyways, we have discussed that after this decline, we feel that the momentum that we were eyeing above 31,600 in the IT index, that plan has derailed, at least for a brief, but yes. So we are not anticipating almost a V-shaped kind of a reversal or recovery in IT pack. So avoid IT, if the view is very short term, means for next week in case if somebody is looking for position. Because either they are going to witness further decline or some consolidation. So chances of recovery and facing resistance on every rise seems more prudent, more possible, in comparison to yes, but yes, selectively, we discussed about emphasis wherein we are seeing resilience. Then Birlasoft, so mid-cap IT names, they are still holding strong, but I would not recommend going aggressive even with the stocks which are doing well. So accumulate them in case if the view is, let's say, for 6 months to 1 year, but for short term, one should avoid. Auto pharma, we have a positive view, but auto again, looks slightly stretched to me, in line with what we have seen. The kind of move, be it Bajaj Auto, Tata Motors is trading at record highs, Maruti hovering around 10,000 mark, Hero MotoCo very strong reversal. But I won't say that one should avoid this sector. So as we were discussing about stock like Hero MotoCo, TVS, these are some of the better names wherein we still have room. Ashok Leyland, I feel it's closer to the resistance after this phenomenal surge. Maruti looks promising in case if you accumulate. So be selective in this space. And Pharma also, we would recommend the same advice that be selective. Sun Pharma, which is even, despite hovering around the record highs, looks promising to us. But at the same time, Dr. Reddy's, Divi's, they are facing resistance on every rise. So the tone is positive, they are gradually inching higher, but we are not seeing decisiveness at the higher levels. So one should be cautious in this space. Biocon looks promising in case if somebody is having a view of 3 to 6 months, to gradually accumulate. So one should go it accordingly instead of maintaining a sector specific view, maintain stock specific view. No stock specific question, please. Pharma, we have already discussed, Mr. Ashok. Financial sectors, Mr. Ramalinge, same view that in line with banking, financials also looks promising. In fact, we are not seeing much damage to the financial package. Be it Chola, Shriram, Muthoot, M&M Finance, all these stocks are performing very well. Some of these names are trading at the record highs. So we feel that yes, one can selectively continue with the long position. But again, in line with what we were discussing about the other sector, keep on trailing your stop losses for the existing position. Because usually during the consolidation in the index, we see erratic swings and we end up holding good stock but at the wrong prices. So this is something that one should understand, especially if the view is short term. So Mr. Rajiv Kumar has asked about pharma, which we have already discussed. Stock specific is something that we okay. So metal also is one sector which he would like to know about. So metals, yes, still looks upbeat to us. General Steel, JSW Steel, they are trading at record high. They have made multiple attempts, even for a decisive move above the major resistance zone, but they couldn't sustain. But still, we feel that stock like National Aluminium, Tata Steel, they are looking very firm. Hindalco that we have discussed last week, wherein we are seeing gradual recovery. So these are the names wherein we expect gradual recovery to continue in the metal space. But when it comes to momentum and the best stocks, they Jindal Steel and JSW Steel remains the top of the pack. All right. See, no stock specific question that I have requested earlier also. In case if you have anything related to any particular sector, we can definitely talk. Okay. All right. Thank you, Subramaniam, for specifying this. Okay. So the next question is on defense sector. So defense, as we were discussing about the PSU engineering and other related, they fall in the same category wherein we are seeing very strong traction. In fact, a very decisive move, and that too after a very long period of underperformance. So defense, we feel that there is no sign of slowness or exhaustion yet. So one can definitely continue to hold the stock like HAL, BEL, BEML. In fact, we are seeing fresh traction. Then we have stock like Kochi Shipyard, Mazgaon Dock. They have already done exceptionally well, but I would rather prefer something which is have already seen some base formation. So BEL, HAL, BEML, they are better candidates because Cochin Shipyard, Mazgaon Dock, they have seen exponential rise, but there's no consolidation yet. So it's something that one should avoid in a market like this, where we are not sure how the consolidation is going to be, whether it's going to be time-wise or price-wise. So usually the stocks which moves very swiftly in a very less duration, they tends to witness profit taking also accordingly. So go with the names which are less volatile within the defense space as well. So long term, anyways, they are pretty much looks stable. All right. All right. All right, so I guess we have done with all the questions. Yes, so thank you everyone for participating. So next week is going to be a final week of the month, means post the monthly expiry. So it's going to be a session by the derivative team members on rollover, how the rollover has panned out. So they are going to address your query next week. Till then, goodbye, take care. Thank you for participating. Thank you.